All right, hello everybody, and welcome to our Lunch and Learn today. We are tackling taxes again, one of our favorite topics. And Jeff, our guest speaker, will take us through how you can save on your taxes and is also ready to answer any questions you might have. Just a reminder, we are live, so feel free to pop a hello into the comments or a quick thumbs up. And if you have any questions throughout the presentation or at the end, please drop them into the comments section at the bottom here, and I'll pass them along to Jeff. All right, so that's all from me for now. I'm very happy to introduce Jeff, our accountant specialist. Thank you so much for joining us, and I'll hand it over to you.
Great. Well, nice to meet everybody. My name is Jeff Jensen. I've been an accountant for over 25 years as CPA and been working, helping people do taxes during that whole time. I work for a company called Vyde Accounting, and have been with Vyde. Vyde helps a lot of small business owners. We have 10,000 clients all over the country, and then been doing that for 11 years. So let's jump in to the presentation. Just to point out, like Nicole said, there will be a Q&A at the end. So go ahead and just put your questions in the chat, and then I'll get to those at the end of the presentation. And so as they come up, just go ahead and drop those in. Okay. So we're going to start off with some frequently asked questions that we get from most new business owners. How do I pay myself? Well, this depends a lot on how your business is set up, what type of entity you are, whether you're a corporation, an S Corp or a C corporation, or an LLC, so proprietorship or partnership. If you're a corporation, you need to pay yourself through payroll, pay yourself as an employee, and run it through payroll, have the taxes taken out. So hire a payroll company to help you do that. If you're an LLC, so proprietorship or partnership, you can just take that money out however you can get it out of the business bank account. So you can put money in or out anytime. The money is not double taxed. It's just a matter of simply transferring it from the business account to your personal account. So whether that's done through a check, a wire transfer, or a bank transfer, that's perfectly fine. Okay, so the next thing is the importance of bookkeeping. Tracking all of the financial transactions of your business is key to an easy tax season, as well as helping you capture all of the deductions that are possible and keeping you informed on how well your business is doing. And the key to easy bookkeeping is having a dedicated bank account set up so that you can run all the transactions for your business through that checking account. So all your income, all of your expenses are going through that checking account. And why does bookkeeping matter? Well, one, it helps you make better informed business decisions. It also helps you ensure compliance with the IRS. And then it's a quick, easy guide to gauge the financial health of your business. If there's no cash in your bank account, then that's an indicator that things aren't going well for your business. It can also help you eliminate stress during tax season. I want to bring up another point here. Usually small businesses are taxed on a cash basis. And what this means is when you receive cash, like when you receive income, the cash for that income, that's when we record it as income. So the deposit into your bank account. when you write a check out for an expense, that's when we're recording that expense. So that's what a cash basis accounting means. It's just following the cash. And the reason that that is so good for small business owners is because then you're not taxed on money you haven't even received yet. If you're on an accrual basis, then you have receivables and you're taxed on that money before you even receive or know that you're going to receive that money. And so that's why most small business owners are set up on a cash basis. Okay, a question that we get quite a bit is, what can I write off? And our team can help you maximize your deductions. But when it comes to the IRS, they don't list out every single business expense that a business can have, because there are so many different types of businesses and so many businesses out there, and their situations are all unique. And so it would be hard to list out every single thing that's deductible for every single business. So what the IRS says is, as long as it's ordinary or necessary for your business, you can deduct it, or it can be deducted. So what does that mean, ordinary and necessary? So let me give you an example. If I have a friend that's a general contractor and he builds houses for a living, and he goes to the Home Depot store and buys a saw and a nail gun, that is ordinary and necessary for his business to build houses. But if I go to Home Depot, the same Home Depot, and buy the exact same saw and the exact same nail gun, as an accountant, that is not ordinary or necessary for me to do my accounting job. And so that is not a deduction for me. So that's kind of, hopefully that helps you understand the ordinary and necessary. So let's go through some common write-offs. Your cell phone, business travel, marketing and advertising, home office, vehicles, continuing education, professional membership fees, bank and credit card fees, books and therapeutic aids, websites and software, and meals. Now, some of these, the ones that are kind of bold, we're going to go in more detail with those, starting off with the cell phone. It used to be that you had to keep track of the minutes that you were using for business. The IRS doesn't let you, or doesn't worry about that now. So as long as you're using your phone for your business, that's a write-off. Now, if you are on a family plan, only your portion can be written off, but 100% of your portion can be written off. And like I said, our team can help you maximize these deductions and help you understand what is ordinary and necessary for your business. So this would include your ClinicSense subscription. That's a common write-off. And it would be ordinary and necessary for your business. So that would be a deduction for you. Okay, so let's talk a little bit about the home office deduction, because we get this question quite a bit. It must be used regularly and exclusively for business. There are two ways to deduct your home office. There's the simple method, and this is, you just calculate the square footage of your office up to 300 square feet and multiply that by $5. And so you get a deduction of $1,500. Or there's the standard deduction, where you track and write off all the actual expenses of the office. So you take the square footage of that office, say it's a 10 by 10 room, 100 square feet, and your total house is 1,000 square feet. So now you have 10% of your rent, your property taxes, your utilities, any general repairs, all of those, and you get to take 10% of those expenses and write those off. Now, if you have expenses that are specifically for your home office, for that room, say you decided to add some cabinets to file cabinets to make things more organized. So specific items in that room are 100% write-off. Now, if you have an outside location that you're going to, but you still use your home office for your administrative things, that's fine. You can deduct both. You can deduct the office that you're renting as well as the home office where you're doing the administrative work. Okay, the next one is car deductions. So your car, you can deduct it. So if it's only used for business, you can write off the vehicle's entire cost. Purchase, the repairs, the insurance. There are two ways of doing writing off a vehicle. There's the mileage or the standard rate times the mileage that's driven, or there's the actual expenses. Either way, you need to keep track of the business miles that you are driving, keeping an auto log so that you know how many business miles you are driving compared to how many miles you're putting on the car. That way you'll be able to take this deduction. So if you're doing the standard or the simple method, you would just keep track of those business miles and then times those by the standard rate, which varies each year, and be able to take that deduction. But if you're taking the actual, then you would keep track of all of your actual expenses that go along with that car, your gas, your insurance, repairs and maintenance, all those expenses. And then you would take the percentage that of business use that you have driven it, the business miles divided by the total miles, and then that percentage you'd be able to deduct those actual expenses. Okay, so next we're going to talk about business travel. When it comes to business travel, there has to have a business purpose for the travel. There can be some personal activity that can be written off. For example, it depends on the business days. So if there's business purpose on Friday and Monday and you stay, so you're staying Saturday, Sunday, then you're still able to write off the full 4 days, even though you only did business on Friday and Monday. Spouses can go along with you, but anything that's extra is not deductible. So any business related activity can be written off. The room, since you're sharing the room, that's going to be a write-off anyway. But souvenirs or extra rooms or excessive expenses cannot be written off. Common business travel includes conventions or seminars, meeting with clients or vendors, or conducting business research. Okay, so structure. So there are many types of business entities, and we want to make sure that you're structuring it the correct way, or way that's going to be best for you. The most common entities include sole proprietorship. This is just you setting it. You don't really even have to set up your business. It's just you going into business and being a 1099 contractor. Automatically, you're set up as a sole proprietorship. Partnerships are the same in the sense that there's no legal, you don't have to do anything legally to get set up. Just by you and a friend saying that you want to work together, you're automatically a general partnership. You would have to get an EIN for that partnership, but other than that EIN, you would just automatically be set up. LLCs are different in the sense that you have to file and structure it with your state. So there's paperwork that has to be filed to do an LLC. But I'm going to come back to LLCs because there's something unique with LLCs. So I'm going to jump to S corporations. S corporations, well, first of all, let me jump to C corporations. C corporations, that's like IBM, Microsoft, these big corporations. They are all, the publicly traded companies are all C corporations. And there's a filing that goes along with that. The unique thing about C corporations is they act and pay their own taxes like they're their own entity, their own individual. These other ones that I have mentioned all flow through to the individual owners, and that's where the taxes are paid. C corporations are different in that they paid their taxes themselves. So let's jump to an S corporation. It is a corporation, but it's structured so that it's more kind of like a partnership in that it flows through to the individual owners. And that's where you are taxed on that level. But the thing that's unique about an S corporation is an S corporation is not subject to self-employment tax like a sole proprietorship or a partnership. A sole proprietorship, well, let me back up. Self-employment tax is a tax to get the Social Security and Medicare taxes from self-employed individuals. When you work for somebody as an employee, they take out of your paycheck 7.65% for Social Security and Medicare taxes. And then they match that Social Security and Medicare and pay that to the government. So they're paying a total of 15.3% of your gross wages to the government. You're paying 7.65% and they're paying 7.65%. When you're self-employed, you're paying both portions. You're paying the full 15.3% of your net income. And that is on your net income for sole proprietorships and partnerships. Now, an S corporation is not subject to that self-employment tax, and that's because the IRS said that they wouldn't be subject to that as long as the owners take a reasonable wage. And so what is reasonable kind of depends on your business and your situation. I'd advise you to talk with one of our, and we'll get into this a little bit later, but talk to one of our tax professionals and we can make sure that when it's the right time for you to do that. But that in and of itself can help you save a lot in taxes. So now I'm going to come back to an LLC. So an LLC is a fairly recent type of entity. These other ones have been around for hundreds of years. LLCs have just recently, in the past 50 years, been created. But when they were created, they didn't know they should be taxed. And so the IRS said that if it's a single member LLC, automatically it would be taxed as a sole proprietorship. If it's a multi-member LLC, so two people owning the LLC, automatically it'll be taxed as a partnership. But you can make elections to have it taxed as an S corporation. So an LLC kind of gives you the flexibility to do whatever you want. And so that's why they're unique, is that it can be whatever is best for you. And so why does this matter? Like I said before, your entity structure determines how you are taxed and the regulations your business needs to follow. Our team can help you walk you through that process. So as I was saying, S corporations, electing to be taxed as an S corp can help you with tax savings once you have substantial net income. But it does require that payroll and additional costs because you have to pay yourself a reasonable wage. So we recommend you meeting with one of our tax professionals, walking through your specific situation to determine if it is a good choice for you, and also if it's the right time to make that choice. You can schedule a time to talk with one of our team to see if it's right, if an S Corp's right for you. So with Vyde, our plans include access to our dash, our financial reports, linking to bank accounts, month-to-month payment with no contract, monthly bookkeeping, business tax returns, personal tax returns, dedicated bookkeeper, dedicated accountant, and compliance assistance. All of that for $125 per month. Now we do have additional higher tier plans where you can get tax planning sessions that focus in on your specific situation and tell you exactly where you sit tax-wise throughout the year. And so those might be a benefit to you. Okay, looks like we're frozen again. I don't know what we did last time to unfreeze. Okay. All right. So I'm going to jump. Well, I think it's back. Okay, I think it's back now. Here is a summary of our plans. We have the 4 plans at the top: tax, bookkeeping, starter, and plus. And this details out what is all included with each plan and the cost per plan. This is on a landing page. If you go to it's on your website, you'll be able to see these. The ClinicSense website, you'll be able to see these in more detail. So we save our clients on average of 50 plus hours and a cost of $2,500 per year. 0 of our clients have been audited in the past 7 years. We're serving 10,000 small business owners. So that's just a little bit more about Vyde. So with ClinicSense, users can get 2 months free plus $500 off your 2024 taxes. So you can use this QR code to schedule a call now, or that number down at the bottom, 385-283-6012. think that was the last slide. So let's go ahead. At this time, I'm going to open it up to those questions that you have, and we'll just start going through your questions. Feel free to add more questions, and we'll go from there. So first question, are we able to get a tax break in Illinois for services we have donated to charitable organizations such as service that was part of a silent auction? If the service is valued at $100, would there be a deduction we can take from that, especially if the service was rendered? So good question. You're getting the deduction because you're not including the income. So as I said before, you'll be on a cash basis. And so as you're not receiving the cash in, you won't have that income to recognize. And so that's where you'll get that deduction. Second question, if we accept insurance and get paid only a percentage of what we charge, for example, we receive $40 of the $100 service, are we able to write off the difference of the 60? So this kind of goes along with that first question that we had of you're only recognizing the income that you receive. So you're only recognizing $40 worth of income. And so there's no need to write off the other 60. It's automatically being written off. Okay, next question. At my old job, we were given free services such as nail upkeep, manicures, and massages in order to stay in good health and keep a polished appearance. Are we able to deduct these expenses in our own business? So when it comes to like you're getting your nails done, your hair done, or the clothing that you wear, what the IRS says is, would you be doing that stuff anyway? So I guess to some degree, let me say, yes, you can do this to some degree. And let me give you the caveat. But if you're wearing uniforms for what you do, that's an easy write-off for your business. But if you're wearing, for instance, this sweater that I'm wearing, I would be wearing this whether I'm going to work or whether I'm not wearing it to work. And so then that's not really considered a uniform. And so it's kind of the same thing, that you just need to feel what you need or for your business to give that appearance. And would you use it for your business, or would you not use it, if you'd just be using it in ordinary life? If it's in ordinary life, then probably you couldn't deduct it. But if it's specifically for your business, then yes, you can. Okay, another question. So with the home office, how do I calculate the percentage that is being used? So that is, you have a dedicated room that's for your home office, and you measure the square footage of that room, and then divide that by the total square footage of your house, and that's the percentage that you get to use.
I have a question for you, Jeff. I normally ask our speakers towards the end, if everyone forgets everything they heard today and they take away one piece of valuable information or advice, what would that be?
Perfect. what I would say is stay up on your bookkeeping or making sure that your transactions are being taken care of, that it's being recorded throughout the year and not wait clear till the end. It's so much easier for you as well as us as your accountant to make sure that we're capturing all of those deductions. If you've been keeping up with it throughout the year and recording all those through that business checking account. It's so hard to go back, say 10 months and try to figure out what a specific transaction is and whether it is deductible or not when it's so far in the past. And so I would say try to stay up with it as much as possible, as quickly as you can.
And good advice in the beginning of the year. This is the right time.
Exactly.
New mindset, fresh approach. Thanks so much.
Make that resolution, that New Year's resolution.
Yes, write down everything. We do have a question.
Oh.
She asks, how much income per year does it become necessary to take a reasonable wage for an S Corp? I'm going to pop it into our chat for you to see it as well.
Okay, perfect. So what we usually recommend is around $40,000. As that is kind of our guideline to say that that is the point where we recommend people become an S corporation. And then from that, so that's the net income for the business. And then from that, you would take a small wage so that you'd get that tax savings. So the income would be roughly around 40,000.
Perfect. We have one more. Can we deduct healthcare or dental premiums?
So this also kind of depends on how your business is set up. If you are an S corporation, then, well, I should take a step back. Yes, you can do that, but it also depends on how your business is set up, because to do that in an S corporation, you have to do it a different way. You have to run it through payroll to get that deduction. But if you're a self-employed individual, then you can just write it off that way. So it just kind of, we can definitely help you with your specific situations, but the answer in general to your question is yes, we can write off healthcare and dental premiums.
We've got another question from Annie. How do I deduct contributions to Roth 401k?
Yeah, so unfortunately, a Roth 401k, you're not able to deduct that. And the reason for that is a Roth goes in after tax dollars, but then grows tax-free, and then you take that out without having any additional taxes. So a Roth is a great avenue. It's just you don't get the upfront deductions of the money that you're putting in, but all the growth of that money comes out tax without being taxed later on. So yeah, that's how a Roth works.
Jeff, while we wait, just a reminder, where can we find you if we want to know more information about Vyde or your services, or have any more questions after the lunch and learn?
You can go to our website, Vyde, VYDE.io/ClinicSense. And that's where you'll be able to find out more about our business and about the offerings for ClinicSense.
I think that's it. Thank you so much. There's no more questions. If there are any more who are watching this talk afterwards, feel free to add them into the comments anyway, or message me directly, reach out to Jeff. We'll be happy to take your questions. All right, thank you
Perfect.
so much for joining.
Okay, thank you, everyone. Appreciate the time that we had together.
Thank you. Bye.
Bye.